Hello guys, it's been a while. Happy New Year. Happy New Year. Welcome to 2025. Hope you guys have a very great New Year. My New Year was a bit all over the place lah. Very busy with so many things. Welcome back, welcome back. So it's been a while. It's been a while. We had a Friday webinar, but now we have a brand new year 2025. January we will have FOMC this month again, and then the earning season is starting again. So we got so many things, okay, so many things. And in fact, I have been talking with my analysts also. We are thinking about coming up with some kind of new program for Patreon lah. So it's something that we are still discussing. Hopefully we can kickstart it on February. But I mean on for you guys there's no changes lah. Okay. I mean since you are already subscribed to Patreon, then of course you will I mean, there will be just additional new stuff being added to what we already have, lah. Okay, because I do want to kind of extend the kind of stuff that we provide. Currently, we have Friday webinar, Saturday webinar, and then of course the trade setup. We have the Discord channels, but I do want to add a bit more stuff, lah. Okay, a bit more stuff so that there's value, there's value to the monthly subscription that you are giving. So in the past, I did try to do a few new stuff, but none of them actually kind of like works out, pays off. Mainly because there weren't many people interested, or maybe there's like I find it a bit too time consuming on my end that I am not able to do it in a regular basis. So we are kind of like bouncing off some ideas. So we will definitely be adding more stuff to share with you guys for this year. Okay. And of course, this year I have a full-time analyst with me. So the load I have isn't so much. Okay. So anyway, for today webinar, right, we are going to do like a very quick rundown of the market for 2025, what we expect, what are the kind of things that we are going to focus on. So just a quick recap, lah. Okay, so for Nimbus Capital for the year 2024, we achieved 80% ROI. So if you guys remember, we also achieved 80% ROI for 2023. Okay, but the difference is that in 2023, right, that 80% return is our peak. That's the highest that we got for the entire year. But for 2024, if you guys remember, we actually peaked at around 100% plus. But towards the end, of course, I clean up my portfolio, and then from the 100%, the portfolio dropped all the way back to like 80% like that. Okay. So as I mentioned previously, also I don't really want to do like window dressing, like fake the portfolio like until 100% when actually it is not 100% return. Okay, so that kind of things is not my style. Okay. So anyway, this year I also hope that I can achieve somewhere around 60 to 100% for the year. I mean, I cannot promise now. Okay. We don't know how this year is going to be like. So I can't like 100% say I will achieve 80% again, but I do think that 60% is the level that I can say I am pretty confident that I can achieve. But maybe 80 to 100, we may need a bit of luck on our side also in order for the portfolio to truly outperform now. Okay, so now let's start with the US market. Of course, we will always focus on the US market. Okay, so excuse me, coughing quite bad recently. So anyway, there has been talk about recession in 2025. So it has been mentioned by many gurus, many Facebook posts. But not only that, we also have a few those bank analysts also saying we have recession coming in 2025. So it's like there can be soft landing, hard landing. I don't know lah. Okay, so the idea, the worry of a recession in 2025 is still present in a lot of retail trader minds now. Okay, so what I want to emphasize is that to be honest, we can't really say for sure, but what I do not want you guys to do is to totally stay away from the market and then you miss out on some of the good runs that may happen now. Okay, so I have a lot of people who actually stayed out in 2024 because they thought recession was going to happen, but actually recession didn't happen, and in fact market rallied quite aggressively for the entire 2024. Okay, market rallied quite high. And same thing for 2023 also. I know a lot of people stay out during 2023 because they fear recession, but market was extremely bullish for 2023. So from the beginning of 2023 up until now, right, market has been somewhat bullish. Okay, so we have 2 straight years of uptrend, and the uptrend is still intact if you want to draw like trend line, and I don't know lah, okay, whatever you like to draw lah, okay. So it is still in a very nice uptrend. If I were to add my momentum indicator, it is not overbought. It's not overbought. You can see that the MACD line is still above 0. It is still a very, very nice uptrend that is going on. But this is just to let you see only lah. Okay, normally I don't focus so much on the indicator itself, but what I want you to take a look is that from beginning of 2023 until now, right, Nasdaq went up about 96%. So if you have been staying out of the market, right, you actually miss out 96% rally, which is quite sad lah, okay, which is quite sad to miss out because you are too fearful already. So sometimes we can be greedy but not so greedy. We can also be fearful but not so fearful lah, okay. You must participate somehow lah, and that is where our long short portfolio strategy comes in, because regardless market crash or market go up, right, we are going to make money either way. Okay, it is just that if market is very bullish, then we're going to lose money on the short, but we will make a lot more from the long. Or if the market were to crash, we are going to make so much money on the shorts, but we will lose some on the long side. Okay, so the idea is that you cannot have 100% profit rate. You cannot have 100% winning rate. You have to give and take. So our strategy is that from the get-go, right, we will assume 50% of our trade will be losing trade, and we will make sure that the other 50% we win more than what we lose. So if you have been paying attention to Nimbus Capital portfolio, right, our win-loss ratio is somewhere around 50. Our win-loss ratio didn't really go beyond 60%. And the reason is very simple, because we are always running short position and we are always running long position concurrently together. But it is just that our winning trades are winning a lot more than what we lose. Hence, even with a 50% short, 50% long, right, at the end of the year, we are still able to achieve 80% return overall on the portfolio. Okay, so now looking at S&P 500 also, from the beginning of 2023, you can see that S&P 500 went up about 53%. So it's not as crazy as Nasdaq okay. So sometimes when people talk about US market, right, US indices, not all indices are the same. If you have exposure to Nasdaq, you are earning twice as much as you are earning from S&P. And the worst is Dow Jones. If you are invested in Dow Jones, then of course that's the worst performer okay. So beginning of 2023 until now, only 29%. So we have Nasdaq that is very close to 100% for 2 years, S&P somewhere around 60% for 2 years, and then we have Dow Jones around 30% for 2 years okay. So I mean, if we divide by 2, then of course Nasdaq have 50% return yearly, S&P has about 26% return yearly, and Dow Jones has only about 15% return yearly, which is very, very pathetic. Okay, very, very pathetic. So not all US indices are the same, and that's why I stay very, very clear of Dow Jones. I never once touch Dow Jones because the return is really horrible. But even when we go down to the sub indices like Russell 2000, Russell 2000 is a small market cap index now, okay? So if we look at Russell 2000, somewhere around 2023 is like beginning of 2023 is like here, up until now is about 28%, is somewhere very, very similar to Dow Jones now, okay? But at some point, Russell 2000 actually made all-time high. Okay, so let's take a look at Singapore market. Also, Singapore market currently right now very close to the high. Okay, very, very close to the high. But it is not the all-time high because the all-time high is all the way back in 2007. But it is very close to all-time high. And I think that it can actually break above the all-time high. Okay, so of course, we wait. Okay, we wait and see whether if this is going to come or not. So next, let's take a look at the bonds, the yield, the treasury yield, which are very, very important if you want to look at the overall landscape of the market for this year. So you can see that the 10-year yield is currently at 4.5%. It has rallied quite aggressively since like the it has rallied quite a bit since this low here. The lowest it went was 3.6%. That is when we have the excuse me, we have the easing cycle where Federal Reserve start to cut rate, and then we have the jumbo cut. The very first rate cut was 50 basis point. It was a jumbo cut, and then the yield dive all the way down, but now it has recovered until 4.5 because inflation is not going down as expected, or the rate cut for 2025 is not as much as initially expected. All these kind of issues that are coming in. Okay, and of course, Trump winning the president election also play a part in the yield going up because Trump is very pro expansion, and he usually favor a lot of expansion policy. So he will cut down on things like corporate tax law, all this kind of stuff. So when he implement all this policy, right, it is very inflationary. So because of that, right, the yield is actually responding to that. Even though all those haven't happened yet, right, the yield are actually responding first. Okay. So for those who are not in the know, we have the stock market and we have the bond market. And these two markets are very, very different. There are bond traders, there are stock traders. And most retail trader will never come across the bond traders because either they don't know the bond trader exists, or the bond traders are just doing their own stuff. Okay. But the bond traders or the bond market actually leads the stock market. So if you have a very intimate knowledge of what the bond traders are doing, what the bond trader thinks is going to happen to the economy, right, usually the stock market will follow. Okay, so it's very important to pay very good attention to the bond market. So we have 10-year yield rally quite a bit towards the end of 2024. Same thing for the 30-year yield. So 30-year yield also went up by a bit. So you can see the back end of the yield curve, right, is actually going up. But if you look at the front end, if you look at the 1 year, it is actually down. It's actually down significantly. And it is still going down right now. And if you look at the 3 month, it is like one straight line down. It didn't even recover. Okay. So because of this, right, for those who are still not aware, the yield curve is actually back to normal. Okay. The yield curve is actually back to normal. So this is a normal yield curve. And for a very long time, the yield curve was inverted. Okay, the yield curve was inverted like this for a very long time, meaning to say that the 1 year yield is higher than the 10-year yield. But currently, the 10-year yield is now a lot higher than 1 year yield. So the yield curve is back to normal. And this is the reason why you see things like the T-bills, your fixed deposit, all those rates are actually going down because things like fixed deposit, T-bills, they are actually the front part of the curve. But if you look at things like Singapore saving bonds, or Singapore government bond, which is around 10-year, 20-year maturity, right? You will see the rate actually picks up, okay? Because the back end of the curve is actually going up. So now, why is this important? It's important because a lot of people uh, knows that when the yield curve is inverted like this, it usually signify an incoming recession. But now that the yield curve is back to normal, right? Is the recession still going to come? We don't know. We don't know. We don't know. But it's good to know that the yield curve is back to normal, okay? So this one thing for you to keep in mind also. And of course, let's take a look at the corporate bonds. The corporate bonds are a very good indicator of financial liquidity in the market also. If the corporate bond is very low, right, it means that the US corporates, they are able to get loan at a very cheap rate. And if they can get a loan at a very cheap rate, it means that they can expand, they can create jobs, all this kind of stuff, okay? So if we look at the AAA corporate bond, it is somewhere at the lowest. So that's the reason why currently market is very, very bullish, okay? And if you look at the high yield are the junk bonds, okay? Recently spiked a bit, but you can see overall it is still a very big downtrend, okay? Very, very big downtrend. So on the corporate bond side, we can see that things are still pretty much very liquid. Any US company that want to get a loan, want to get some kind of funding from the banks, it is actually still very easy to get fundings now, okay? The only thing that I'm a little bit worried is the 10-year yield being a bit high right now, okay? So with the 10-year yield at a higher rate, with the 30-year bond at the higher rate, it means that your mortgage rates are also slightly higher because mortgage rate usually is 30 years or 20 years. So they follow the 30-year yield and the 20-year yield, okay? Which is why you can see that recently the home builder sector not doing that well. The home builder sector actually a lot of home builder stocks are actually going down because of the spike in the back end of the yield curve, okay? So you can see Lena going down. Lena Corporation actually broke the resistance there. We have DR Horton also hanging around at the support. Sorry, not resistance, broke the support here. DR Horton hanging around at the support. Builder First Source also crashed quite a bit. Pool Corporation went down quite a bit. PHM went down quite a bit. Toll Brother also went down quite a bit, okay? So we have all these stuff going down quite a bit. Then let's take a look at some of the other stuff. We have US unemployment rate currently sitting at around 4.2%. So if we look across the past 5 year or even the past 10 year, right, it is slightly higher. It's slightly higher compared to like the 2022, okay? But if you look back all the way to like 2017, 2016, right, it's actually a lot lower. Back in 2015, right, unemployment rate was 5.7. January 2016, 4.8. And even all the way until like 2019, right, it was hovering around 3.9, 4.0, somewhere around there, okay? So now you can see that in the recent months, actually towards 2024, unemployment rate is a little bit trending up, but for now, it seems to be stabilized a bit, okay? It seems to have stabilized a bit, so we have to wait and see. And one thing I want to emphasize is also unemployment rate is a lagging indicator. Okay, so you cannot use unemployment rate as a means to predict where the stock market is going because usually when unemployment rate suddenly spike, right, highly likely that stock market already dropped, okay? But rather you can use it as a form of confirmation indicator, okay? A confirmation indicator. So if the market has crashed and then next month you see unemployment rate goes up, right? Then you can like, oh, okay, that's why market crashed. But you cannot use it as a form of trading signal, okay? So this is one of the mistake a lot of people make also. When unemployment spike, they go and short the market, and then after that market immediately recover. because that was like what happened a few months ago already. It is a lagging indicator. Okay, so now very closely tied to unemployment rate, right? We have the US inflation rate. So currently US inflation rate is sitting at somewhere around 2.6%. So you can see the highest was 9.1% somewhere in 2022, June 2022. That was the peak. And then ever since then, right, it has dropped significantly. And now we are back to what I will call a normal inflation rate. Okay. So if you look at 2017, 2018, 2019, inflation has been always somewhere around there, 2.9, 2.7, around there. Okay. So I would say that inflation is currently in control right now, but whether or not it may spike up again is a little bit hard to say, because as I mentioned earlier, Trump way of doing and business and governing, right, is a little bit pro-inflationary lah. Okay, so we have to be mindful of that. And one of the areas that I'm looking to trade is also oil and gas in the industry, because oil and gas is by nature anti-inflationary. So usually when inflation goes up, right, oil and gas tends to rally also, because prices go up lah. Okay, gas prices go up, fuel prices go up, and Trump, he is by nature, he is also very pro oil and gas industry also. So that's something that we want to focus a bit on also. And then we have building permits. So building permits has been on the down low for 2024, but we can see the most recent reading kind of like spike up. And depending on how the yields are going, we may see this one continue to like peak here and then go down some more lah. Okay, so building permit is something to look out for also. If the 10-year yield, 30-year yield start to continue to increase further, right, then we may see the building permit U-turn. But if the 10-year yield and the 30-year yield start to go down, then maybe building permit may start to go up. Okay, so building permit trending up, right, is actually overall a very good indicator of a bullish market. Okay, and it does seem that the most recent reading is somewhat bullish. And of course, we have the existing home sales for US. So existing home sale are your resale flats. Okay, these are houses that are already built. It has a first owner, and then now it is trying to sell to a second owner or third owner. Okay, you can consider them as the resale market. So now, why is the resale market very important? It is because during 2020, 2021, 2022, we have very, very cheap interest rate, very, very low interest rate, somewhere around 1% like that. So during that period, right, mortgage rate was very low. Mortgage rate was extremely low. So whoever in US, right, managed to lock in that mortgage rate for the next 30 years, right, highly likely that they are not going to give that rates up, because it's simply too cheap already. Right now, if you want to get like 1.5% mortgage rates on your home loan, right, you are not going to get it. You are never going to get it in the next 30, 40 years already, unless some crisis happen now. Okay, so because so many people back then able to lock in such a very good rates, right, most of them don't really want to sell their house, because if they sell their house and then if they buy a new house, then their mortgage rate will be the new current rate lah, which is like 3%, 4% like that, which is quite high lah. So because of that, right, we have this phenomenon in US market where nobody want to sell their house. So the existing home sale, right, actually went down. So you can see the existing home sale actually went down by quite a bit. So it kind of like peaked somewhere here, a lot of people buy. And then when interest rates start to spike up, right, you see nobody want to sell their house really. Nobody want to sell their house because they don't want to give up their cheap mortgage. But recently we see a bit of spike coming in lah, but the spike is still not breaking the previous resistance. So that's the reason why, right, even with high mortgage rate, you see that the home builders are still rallying because nobody is selling houses. Nobody want to sell house. In US, the only way to get new house is to wait for the only way to get house, a home, is to wait for a new one to be built. That's why all the home builders are making so much money, and the home builder stocks are all rallying like crazy lah, until very recently lah. Okay, so if the existing home sales start to spike, where many people start selling their house, then the current housing market in US, right, it will be flooded. It will not only be flooded with the inventory from the new houses, it will also be flooded from all those people who are trying to sell their house. And if this one suddenly spike up very high, right, then it is very likely that you will see all the home builders start to crash, because right now, all the new houses that the home builders are building, they will have to compete against the resale homes. And that is one indicator that we can look out for. Okay. So next, United States new home sales. So these are the new home. Okay. These are not the resale. These are the BTOs. Okay. Of course, in US, there's no B2, but these are the new home sales. Okay. So recently, still doing quite okay. Still doing quite okay. There's still some demand coming in. Okay. There's still some demand coming in. It is still at a quite a high level. But if this one start to drop, if the existing home sales spike, new home sales start to drop, then it is a sign that US housing market is being flooded with too much supply already, and that is where we may possibly see a very big decline in the home builder stocks. Okay, so these are some of the stuff that we are looking at. So next, GDP very, very important. So US GDP quarter three somewhere around 2.7%. It is the norm lah. Okay, so if you look back, of course this is the 2020, don't count lah. Okay, and then of course we recover from 2020, don't count also. We have the spike. These are the two outliers. But aside from these two, right, overall it is the norm lah. Okay, 3%, 3.2, 2.9, 3.0, 2.7. If we look across 10-year, right, it is the norm now. Okay, it is the norm. So as long as it is hovering somewhere around 2.5, 2.6, US is still doing quite okay now. Okay, as long as it doesn't go to like 1.5% like that, then that one quite jala already lah. So because US is a mature economy already, you can't really expect the GDP to be very high like China like that. China, during their growing phase, right, during their industrialization, globalization phase, China's GDP was as high as 15% or 10%. Is very, very high. But China right now, their GDP have dropped all the way to 4%, 5% like that. So you might be thinking like, hey, China 5%, well, is like twice amount of what US is. But the thing is that China just shifted from a developing economy to a developed economy. As they become more and more developed, right, you will see the GDP growth start to decline, and eventually China's GDP will be somewhere around like 2%, 3%, somewhere around there also. Okay. So it's like you are imagine comparing the height between an adult, which is United States, and somebody in puberty who is still growing at a very fast pace, which is China. Okay, so eventually they will reach somewhere around the same level of GDP. So the issue with China now is that the GDP is dropping quite sudden and quite fast paced. So there's a lot of uncertainty going around in China also. Okay, so now since we are talking about GDP, let's take a look at the most recent summary of economic projection from Federal Reserve, which was on January 18, 2024. So that is like a few weeks ago only. Okay. So hopefully it's still fresh in your mind. So now the projection material for 2025, let's take a look at a few things. We can see that the GDP is 2.1%. Previously projected was 2.0. It was raised by a tiny bit, 2.1%. So the longer run, right, is only 1.8%. So US is actually kind of like slowing down in terms of growth, okay? 1.8 like that. And of course, the surprise was the federal fund rate target. So the federal fund rate target for 2025 is 3.9. Currently, the federal fund rate is at 4.4, meaning to say there will be a 50 basis point cut in 2025. So now this 50 basis point, most likely there will be 2 rounds of 25. So we don't know if this 2 round is going to come at the front part of the year, meaning to say January, March, or is it going to come somewhere towards the end of the year, somewhere around September, November, like that. We don't really know also, but we shall see lah, okay? Because the upcoming FOMC is somewhere towards the end of January, which is not very far off also lah, okay? And of course, the PC inflation target is about 2.5%. Previously, it was 2.1, but they raised the target to 2.5, which should be the reason why the federal fund rate projection went up also in order to combat the PC, the inflation numbers. Okay, so I also think that the reason why the inflation number were being raised and the reason why there are lesser cuts coming in 2025 is because of Donald Trump. I think the FOMC is realizing that if Donald Trump were to start implementing all this expansionary policy, right, then they will have to have plans in place lah. They will need to have protocol in place to prevent a sudden spike in inflation again lah. Okay, so you can see that like you can say a lot of bad thing you want about Jerome Powell or the FOMC, but in fact I think they are doing their job very well lah. Okay, and in fact like the fact that we are able to get inflation back down to 2.7% while the stock market is still at the all-time high or very close to all-time high, right? It is a miracle, okay? It is actually a miracle because if you were with me back in 2022, right, I actually have significant doubt that they will be able to get inflation down without causing a big reaction, without the S&P 500 going down significantly. But in fact, they managed to do it lah. Okay, so like credit given where credit is due also lah. So we have the market currently at very close to all-time high lah. Okay, so now so what do I think about US overall in 2025? Firstly, let's keep it short and sweet lah. Okay, I don't think recession is going to happen, although a lot of people are saying, but I don't think a recession going to happen. Maybe we will have 1 quarter of negative GDP, but 1 quarter of negative GDP is not a recession. Recession is 2 consecutive quarters, okay? And so I don't think a recession going to happen, but we may see some form of correction in the market. So when I say correction, right, I don't mean like the market crashing all the way until don't know where. I'm not talking about like a big correction. I'm not talking like 2022 like that. I don't think this is going to happen. I think what we will get is maybe, excuse me, what we might get is maybe something like this, or maybe something like this. A little bit of stagnation now, okay? Market will still go up, but I don't think it will go up as aggressively as 2023 or 2024. It will be a little bit more modest now, okay? It will be maybe something like this. Yeah. It will be maybe something like this, something like this, okay? Something like this. Previously, it was like this. Previously, it was something like that. But I think it will be somewhere along the purple color line lah. Okay, I don't think it will be like a very aggressive rally also lah. Okay, so of course we will remain bullish, but we will still have short position here and there lah. Okay, short position is a must. You cannot not have short position, because when markets start to spike down like this, right, you cannot have your entire portfolio get cut off or get liquidated because of a short correction. You must earn something when this kind of movement take place also lah. Okay, so you have to make sure, regardless of whatever that is happening to the market, you must be able to earn something. So now, one thing I didn't cover also, we have dollar index that is like crazy high. Dollar index currently at 108 like that. Dollar yen also, sorry, dollar yuan is at 7.3. Dollar yen is at 157, very close to the previous high, which is like 151 like that. So US dollar is like being very, very aggressive, but at the same time, for the past few days, gold went up quite aggressively also. So a lot of people are saying, wow, gold and US dollar go up together, something big is happening, something not right. But actually, like 2 days of discorrelation doesn't mean anything now. Okay, if we want to really say gold is going up, dollar is also going up, we must see some kind of significant trend now. Okay, we cannot just say that based on 2 days candle. That is not significant enough. You have to do all those statistical t-tests, all those kind of stuff lah. Okay, you cannot just simply see two candles and say, wow, go up, dollar up, wow, something bad happened. So like, I don't know, I mean, it baffles me that traders don't understand statistic, the importance of statistic, or maybe they do understand, but they just want to create some kind of like big hoo-ha lah. Okay, but anyway, I don't think the recent rally in dollar and gold is anything of something that we need to worry or go and take note. Okay, and in fact, gold currently it is still looking a little bit bearish. I do think that it will break here and dive down. It's just doing a bit of like a relief rally lah. Okay, if you want to call this a rally, it is some kind of a relief rally, but to me, this is not a rally. Like 2% up is not a rally. Maybe this is a rally. This I will consider it as a relief rally, but this one like is daily volatility lah. Okay, it's just daily volatility. So now the reason why I'm mentioning gold is because we still have Barrick Gold. Okay, we still have Barrick Gold. So for those who remember Barrick Gold, our structure is a calendar structure, and our strike price is $16. So before it's a ratio calendar. Okay, so before January 25, right? Before 17 January, Barrick Gold have to be above $16 so that we can get the premium on the shorts lah. Okay, so if you feel that Barrick Gold currently going up like you scared, right? It's actually good for us. It's actually good for us that Barrick Gold recover back to close to $16. We get the January premium, and then after that it crashed further down. That's the best case for us lah. Okay, so Barrick Gold, I'm gonna leave it as it is right now. So next, I want to talk a little bit about China also. So China, there's a lot of hoo-ha coming about China, more stimulus coming in, blah, blah, blah. But one thing that caught my attention is that the World Bank actually raised China GDP forecast. Okay. So now the issue with China is that you cannot go into China government website and look at their GDP forecast, because firstly, they don't release. Secondly, even if they release, right, you cannot trust them. Don't know where they plug the number from. Okay. So you have to trust external sources. So in China, right, they also release something like ISM data, like how we look at the US ISM data. China also released their own ISM, but the thing is that their ISM data cannot trust one. So we always need to depend on external data source lah. Okay. So anyway, World Bank actually raised China GDP to 4.9%. So previously it was like 4.8%. Previously it was 4.8. So they raised it a bit this year lah. Okay, they raised it a bit this year. But the good news is that it is being raised. It is not declining lah. Okay, it is not being guided down. It is actually being guided up. And of course, China themselves set around 5%, but China has been setting 5% for almost every year lah. I think that's their target lah. So I do think this year might be somewhat a good year for China. Cautiously bullish lah. Okay, cautiously bullish. Of course, a lot of people worry that Trump may impose a lot of tariff here and there. But as I mentioned before in one of the webinars back in like December, that I do believe Trump is more of a businessman. And if China decide to play fair, I don't think Trump will do funny thing lah. Okay, I think Trump, from a businessman perspective, he does make good decision. And of course, overall, his goal is to bring the jobs back to US. That is his main goal. And in pursuit of that goal, if he have to set tariff on China, then that one is cannot be avoided lah. But of course, right now, a lot of the jobs are no longer in China. A lot of the US job went to Vietnam, went to India already. So I don't think Trump's biggest focus now is on China also. And China has been facing deflation for majority of the 2024. So I don't think Trump want any negative relationship with China also lah. Okay, so we may have like what we will call the opposite of what everybody is expecting, like wow, Trump president, China die liao lah. But in fact, we may see some positive trading relationship going on between US and China also. I mean, if both party play fair, then both stand to benefit lah. And from the way the way Trump works from that business angle, I think it is something that we can look forward to also lah. Okay, of course, this is not saying all in China, that kind of stuff lah, but we can be cautiously bullish. We can be cautiously bullish. So in fact, for those who doesn't know, I do have a very big stake in Lenovo. My buying price is somewhere around $10. So currently I'm like break even now. Okay, I'm like break even right now. My previous buying price was around 10.50, and then when it went down here, I pick up some more. So my average buying price is around $10, and in total I am close to $80,000, 80,000 Sing dollar worth of Lenovo stocks. So I do have quite a big chunk lah. Okay, so it is something that I am planning to hold long term, and the reason why is because Lenovo is one of the leading company that is coming from China in terms of AI. And the reason why they are leading is because they are actually shifting their headquarters from China to Singapore. And the reason being is to skirt the tariff on all the NVIDIA chips, all the AI technology lah. Okay, and in fact, I do know high level personnel inside Lenovo, and they are saying that in order to develop AI, they cannot stay within China because the progress of AI within China is like very behind US. And the reason is that in order to do machine learning, in order to develop AI at a much faster pace for all the machine learning to happen, you need a good set of data. The machine need to work on a set of unbiased data in order to learn. But the thing is that within China, there's a lot of government propaganda. There's a lot of fake data, and machine learning cannot learn on a proper data that is heavily influenced by propaganda lah. Okay, and of course, like China also does a lot of censorship, and that is a very big barrier for any kind of machine learning to happen also lah. So there are a lot of companies that are trying to come out from China in order to sort of develop their AI, and actually Lenovo is one of them. Okay, so long term, I do have quite high expectation on Lenovo. So it's something that maybe if you are interested, you can like play small lah. Okay, don't be like me, play so much. But of course, I mean, I play so much is I manage my risk also lah. Okay, so if you are interested, you can play a bit. You don't need to go all in. You can buy batches by batches and then hold long term now. Okay. So I'm planning to hold this for like next 5 or 10 years. I think it will do well. And the dividend is giving at around 3.93%, which is not bad also. I mean, it's not great, but not bad. Okay, not bad. But the funny thing is I don't know how dividend work for how, how dividend work for Hong Kong companies, okay? Because for US company, you get 30% dividend tax in Singapore. But for Hong Kong, I'm not really sure. I have to go and work it out. So I haven't received this dividend yet. I'm supposed to receive this dividend, but I have no idea where is it. I need to check my account. So it's something that you can look out for, okay? So now I'm not going to put up any trade today. But going into next week, we have quite a bit of trades that I want to input. So currently, as I say, right, we are still holding Barrick Gold, which is doing quite okay. Go back to 16 is good. I don't mind it back to 16 until the January leg expire. And then we hope for a crash, okay? We are still holding fresh work. So fresh work, I will just let it be also. Of course, this is February strike. So February strike is in 1 month, 1.5 month times, okay? So we still got a bit of time for fresh work. But if we start to slide further, right, I may exit the position early in order to save some money so that you don't lose the full amount of the option, okay? We just lose maybe like half of it. And then we will restructure this again to see whether if we can get a better risk reward ratio or not. So a few things on my watch list is I believe I mentioned before, on the long side, I'm actually looking at Argan, AGX Argan. So Argan is very pro-Trump, very pro-Trump stock. It is industrial service, engineering and construction, but it is also in the energy service. So it's everything that Trump likes, okay? So I think it's tend to benefit from some of the policy that Trump might put up, and I think it can go up a lot higher. And in terms of the company also is doing very well in terms of profit and net margin wise, right? Is doing very well. You can see that in the recent quarters, right, the revenue is consistently 50%, 60%, 50%. And you can see that the net income also 273%, 400%. So it's growing very strong. Okay, it's going very strong. So 2023 wasn't a good year, but I think that 2024 is going to be a very good year, and 2025 will be even better. Okay, so AGX recently retraced a bit, which I believe is a good area for entry. You have this very big pin bar here. Like people will say, oh, this is stop hunt or whatever. Okay, you can actually put your stop loss here, very nice, and play this one to the upside. Okay. And in terms of momentum wise, it's still coming down. You can see it went overbought, okay? It went overbought here and then it start to come down. So what I am kind of like waiting for is maybe for the MACD to go above the signal line, something like that. Then you can consider entering. If you are a stock trader, okay? If you are a stock trader, you may want to wait for that crossover. Or if you are an option trader, then you don't really need to care. You can just go in, buy the option already. And the reason is because for options, right, it doesn't matter how much the stock drop. The worst you can lose is your premium. But if you are a stock trader, you need to place your stop loss. And if the stock is still going down, right, then it can actually hit your stop loss and then it chung up. You don't want that to happen. You don't want the stock to hit your stop loss then rally. So it is a more safer for the momentum to go back up first, then you enter for a stock trader so that you don't randomly get stop out. Okay. So this is something that you can take a look. The next one is actually 5 below, but 5 below is a short idea. It's a short. So in fact, yesterday dropped 5.6%. So I wouldn't say we are too late. In fact, we can still go for the short. In fact, this drop is good because it let us know that the stock have broken down already. And then maybe we can put our stop loss somewhere here and then our target somewhere here like that. Or maybe stop loss a little bit lower also can. Okay, we can play for that kind, or maybe even all the way until 60 also can. Okay, we see how lah. Okay, we see how today perform. And taking a look at momentum, you can see very nice. The momentum is actually good. If you are a stock trader, right, you may want to enter this today, up to you. You can see it went oversold. It went overbought a bit. Now the momentum is coming down and you can see the MACD cross down the signal line already. So you may start to see more downside coming in. Okay, so this one, if you want to short today, by all means go ahead. But personally, I will short it next week. Okay. I mean, I'm not gonna FOMO into this okay. So these are the long and short I have at the moment. So of course, currently we also have Freshword long and Berry Gold short, which is also a long and short. So things are good okay. It's good to go into the new year with a balanced portfolio. Then after that, we decide whether if we want to lean a little bit more to the long side or a little bit more to the short side. Okay, so Freshword recovering a bit. Then the other one that I'm still looking at, Celsius. Celsius, okay, maybe the current Celsius trade might be gone, but I may want to enter this again with a better timing, Maybe previously the timing wasn't that great, okay? But let's take a look at the momentum again. So now I'm not basing my trade solely on the momentum indicator, but I do think that Celsius has fallen enough and their growth is still there, and this is just way too oversold for the kind of growth that this company have okay. So I think somewhere like in the near future, even if it doesn't go back to the previous high, right, I still think this one can at least cao like 60% upside okay, maybe from here to maybe even $50 like that okay, at least somewhere like retest here okay, retest there okay. So I think at least it can go there. So just that our entry timing need to be soon a bit okay. So this is something that I'm looking at also. So the other one, I believe we also still have ANF short. We also still have ANF short, but the ANF short, I think, when is it expiring? February. Yeah, the ANF short is expiring in February. The strike is 100. We are still very far from 100, but February is still quite a while okay. So maybe this one still got chance, so we may hold on to this. And one more long position, and that is Credo. So I believe I have shared Credo, the story about how my analyst managed to double her account on one trade alone, like $67,000 profit from just one trade, which is crazy because she entered at $41. Credo went up 72% on earnings date. But I believe that this is like the new Nvidia. So it can be much higher. It can actually go much higher, because if you look at the financial, you can see that in 2023 the growth was only 4%, but coming into 2024, right, you can expect somewhere around 100% growth coming in now. Okay, the growth is crazy. The growth is crazy. Okay, and you can even see from the projection, right? Look at the next quarter three projection. It's so high. It's so high. The previous quarter three was like right here. The current quarter three is so high. And quarter three, quarter four, right, with increasing revenue growth, right? I believe they are going to consistently make like 100% growth, 100% growth year over year, okay? And that was what NVIDIA did back then when all the AI start to come into play. So what Credo does is that they are, I don't know how to explain, but what they do is they deal with data infrastructure. So the data infrastructure is like your LAN port like that, where you need very good cable to transfer huge amount of data okay. So with all these AI technology coming into play, right, a lot more data are being, yeah, correct, high speed connectivity solution. So what they so there is a requirement for this kind of infrastructure in place so that you are able to transfer a high amount of data across server, across different PC or whatever okay. Like when in the past we have dial up, then suddenly we went to fiber optic, something like that. So Credo is actually one of the, I would say, major player in this field, and a lot of data center, a lot of all this um computer infrastructure is in need to upgrade their connectivity solutions, okay, so that they can transport all these increased amount of data that's being transferred due to all this AI stuff that is coming in, okay. And I think the growth on this is quite high. So maybe, and recently it went up 5% yesterday. So it does seems like this is a very good support area. It does seem like this is a very good support area, but maybe it's going to like zigzag for a while. It went into overbought mode, and you can see the MACD cross down. So maybe you may see it zigzag for a while, maybe drop a bit before it does another rally, okay? But we do want to be in time for this earning. We do want to be in time for this earning. So hopefully before this earning, right, this one retrace, okay? So Credo, very bullish, something that I'm looking at. Aside from that, oil and gas also, let's take a look at Matador. Matador already expired, okay, it expired in December, but we can always play again. Yeah, Matador recently going up. So we see how, okay, we see how whether we want to play this or not, but I think with all the oil and gas in play, right, I think this one can go up a lot higher also. Anyway, today, right, later, the ISM manufacturing PMI is coming out, but it's at 11 p.m. So I don't think we will still be here when this data come out, okay? So we will go through this data next week, because next week the ISM service is also coming out, and then we will have the non-farm payroll coming out also. So next Friday we have quite a lot of data that we will have to go through, okay? So I'm gonna go through ISM's manufacturing ISM data next week, not this week. Next, Singapore. Let's take a look at Singapore for a while. So somebody was asking me whether if it is a good time to pick up certain REITs such as Fraser, all this kind of stuff, right? So okay, REITs are good to pick up, but what I would advise is that you pick up slowly. You don't all in, okay? You pick up batch by batch by batch. So I have been picking up Maple Tree Industrial Trust bit by bit by bit. So my first entry was here, second entry was here, and then after that it went down. My third entry was somewhere here, okay? So all in total, I have about 30K here. But if it drops some more, I can pick up some more, okay? So I intend to put about in total 50K. So the advice is you don't all in 50K at one go, okay, you split them up so that as it falls, right, you can pick up some more. And you can see from momentum perspective, it seems like the downtrend is kind of done. The uptrend is picking up again, and hopefully it is aligned with the interest rate coming down also, okay, the overall interest rate coming down also. I think for Singapore, it's not exactly like US. I think Singapore rates are much lower than US right now. So I think Singapore rates are generally okay as long as you pick the right one, as long as you pick the good one. So I tend to stick to things that are visible to me, things that I can see. Like for example, Maple Tree, I can see all the risks going on the building names lah, okay. Fraser is also quite okay, but don't go and pick those funny one. I don't know lah, okay, like Prime US REITs. I don't know this one, like crash until don't know where's yeah. Okay, so when you are picking risks, you have to be a little bit careful on the kind of risk that you are picking up also lah, okay. So I don't really do in-depth analysis, fundamental analysis on all these kind of REITs. I just pick the one that I have like okay, like I don't want to say this, but I usually pick the one that I have a good vibe in the sense that I do have bullish view on Singapore industrial area. So that's why I went for industrial REITs, and Maple Tree is a very well-known name lah. Okay, so I just went for Maple Tree Industrial. So I will never go for things like Prime US REITs lah or some other funny REITs lah. Last time got this REITs that is based on a cruise, and then they are giving out like 10% dividend, and then after that they just suddenly shut down, and then I think the company got declared bankrupt or something lah. So don't chase funny REITs lah, okay? Don't chase the dividend yield. The dividend yield a bit low, never mind, but chase something that you know, because when the price start to drop, right, you can actually pick up cheaper. And one thing I look at also is that I will click the rates, and then I will look at all the dividend payout, okay? So you can see here 0.034, 0.034, 0.034, 0.034, then 0.033, 0.009. So this one is interim, okay? 0.025, 0.033, 0.034. So the key thing here is you want to pick rates that consistently maintain the dividend payout. You don't want to pick something that the dividend payout is going down one, okay? So of course you don't need to come here and click lah. You can actually Google Singapore REITs dividend payout, and then from there you can see lah, okay? So try to pick those that are firstly very stable in terms of their name. And for example, I tend to stay away from China, so all the greater China REITs, Pan Asia, I stay away lah, okay? Because I mean, real estate in China is like really very jialat, so you don't want to touch lah, okay? The reason why I pick REITs is because I want Singapore exposure. I don't want all the funny China stuff lah, okay? If I want to play China, I will go and buy something in China, like buy a China stock lah, okay? But not REITs. So the purpose of REITs in my long-term portfolio is to give me the dividend lah, okay? So to give me something like a fixed income without me needing to do anything lah. So you just collect the dividend lah, okay? So you just pick something that is like consider quite safe in terms of the name, and make sure the dividend payout is consistent. Going up is good, but not coming down lah, okay? So some of the REITs, they actually reduce their dividend payout because they are not doing that great. So those are the ones that maybe you may want to like watch out a bit lah. Okay, so the other one is Franken. I still have Franken. So Franken, somebody asked me what's going on with Franken, like how come keep dropping. Okay, to be honest, I don't know. Also, I don't know why is it dropping. But of course, I do think that it is overall like this period okay, is overall the Singapore market. So now when we talk about Singapore market, right, we cannot talk about it like how we look at US market, because if we look at straight time index, it is very close to 52-week high. But then you go and see Franken, I don't know where already. We cannot do that because straight time index is very biased. You have the three banks that is basically holding up the entire index lah. Okay, any other stuff on the straight time index actually have very little weightage, very little weightage. So Singapore market overall, if you look at the non-bank stuff, right, they are all over the place. Some crashing like crazy, some rally like crazy. So we cannot look at the STI and say, oh, how come STI up but Franken is down? We can't really say that. Okay, so Singapore market a little bit more fragmented, so you have to be careful a bit. But anyway, I do think Franken, despite the recent downtrend, right, it is still nonetheless one of the better company in Singapore. I don't want to say it's a very good company, but it is one of the better one. And frankly speaking, the reason why I buy is because I'm hoping some kind of privatization will take place, because a lot of good companies in Singapore get privatized already. And Franken is like among the last standing one that has been consistently doing very well. You can see all the way back in like 2010, right? Like 他妈的 like 1毛钱而已，现在一块一了。At the top it was like $2.34 lah. Okay, so it is one of the better performing one lah. Okay, and I do think give it time, right? I think it can recover also. And of course, the dividend payout currently is a bit jialat lah, okay? But still you're getting something lah, okay? A bit like a like like a few cents lah, okay? So that's for Franken. Of course, if you are not confident, then I advise you not to hold lah, okay? And you must have holding power lah. The reason why I don't really care so much is because for Frankel, right, I don't have a lot of money inside here. I only have like maybe $15,000, $16,000. If I were to lose, if I were to cut loss, maybe I lose like 1K, 2K lah. Of course, I'm not gonna lose the entire 16K lah, unless Franklin goes to zero lah. But I don't think Franklin will go to zero also lah. Okay, so it's a very small amount that like I can just put it under the pillow. If it goes, even if it goes to 70 cent or 75 cent, right, I don't mind buying some more here, and then eventually if it recover, I can ride the trend now. Okay, so the way I trade Singapore stock is a little bit different, because like I'm looking towards a little bit longer horizon. Singapore stock don't move as fast, or they are as volatile as US. So I can't expect a similar time frame of 2 months, 1 month time frame for Singapore stock. They are just too slow moving already lah. Okay, so I have a little bit more leeway, a little more tolerance for Singapore stock. But you can also see recently all price spiking up, all the Rex International, RH Petrol Gas all going up a bit. We have Ctrem going up 5.8% also. I think maybe this one like got hope like that. I don't know lah. Okay, I don't have good good experience with Sembcorp Marine, which is currently now known as Ctrem. So trade with care lah. Okay, trade with care, but it does look very bullish here. Sembcorp Industry at 5.5 doing quite good, but I think one of the bigger winner is actually Comfort. Comfort rallied quite a bit from the bottom here, from like $1 like that, now $1.48. But you can see that for Comfort to go up 45%, it actually took all the way from June 2023 until January 2025. So that is the issue with Singapore stock. Even with a very good, what I will consider this a good rally, right? The time taken for it to rally 45% is simply too slow, okay? Sometimes you can be sitting for days and weeks and the stock doesn't move at all. You can see here, like imagine you are sitting here from January 2024 all the way until like February, and the stock is not moving at all. It's just one straight line like that. and imagine being stuck here. Imagine being stuck here all the way from September at $1.48. Right now it is still at $1.48. Like already 3-4 months went by already. It is still stuck there. It's not moving at all. So, and in fact, ComfortDelGro is a very liquid, very big Singapore company. It is not some ulu penny stock that nobody trade one. It is something that a lot of people trade, but it is still stuck there. Okay, so of course, if I want to maximize the utilization of my fund, I will definitely go for US stock. Okay, the only time where I will come to Singapore is mainly dividend plays. And of course, I think ComfortDelGro dividend is not bad, 4.95%. So yeah, I mean, okay, you get stuck there, you get 4.95%. Okay, not bad, not bad. And I think the other winner is also Singtel. Singtel actually rallied quite high. Singtel actually rallied like crazy here. So this is a good rally. This is definitely a good rally, okay? From like $2 all the way until $3, 53% from May until September. So this kind of rally can, but very hard to spot. The thing is very, very hard to spot. All-time high really. Okay, all-time high. Of course, earlier in 2024, we managed to get sets, which is this big rally here. So this is one of those lucky moments where we managed to get in at the right time and the stock actually rallied quite a bit. Okay, so this is one of those times that in fact, this was the first Singapore trade that we took in a very long while. The last Singapore trade was all the way back in 2021 like that. So it was after 3 years we took our first Singapore trade. Eat $4, then just nice. Okay, so nothing much going on. We have WeHer also going up quite a bit. I have no idea what WeHer does. Let's take a look. Engineering construction. Okay. We also have where's Grand Venture? We also have Grand Venture doing quite okay here. Grand Venture went up quite a bit. So Grand Venture is very similar to Franken. So in fact, when I was trading Franken, I was hoping the rally to be something like this, but I didn't know is Grand Venture was the one that showed up. So for those who joined us back in the early days, I'm sure you all will remember this. We actually caught this entire stretch. This entire stretch, we managed to catch it during the early part of the post-COVID. Okay, is the market going to open? 10:18. Okay, guys, so I hope this first webinar for the year give you a little bit of insight. I mean, I just want to cover very, very basic, very surface level. Okay, I don't want to go in too deep also, but on the 17th, of January, I will be doing one public webinar. So on the 17th, instead of our Patreon webinar, right, I'll be doing one public webinar where I will go through Nimbus Capital performance for 2024. So I'll go through our biggest winning trade, biggest losing trade, and also a bit of more in-depth insight on what to expect for 2025. And of course, everybody is free to attend. Okay, it will be 9 p.m. same as our usual webinar timing. So I hope that you guys can come and attend also. So in order to show you what it looks like, I did the same thing back in 2023. So if you want to have an idea of what is it like, you can go and take a look at the video. Wait. Only funds. There are no short positions. It's something like this. You can come to my YouTube channel, and this will be on the homepage now. Okay. at the home page, you can see this
So
already.
most strategy attempt to
Oops.
catch.
So I'll be doing something like this. So I will cover the strategy that we use, and then I will cover our performance for the year, blah blah blah, all this kind of stuff lah. Okay, so you can see this video is about 1 hour and 56 minutes. So expect the webinar to be about 2 hour long. 2 hour long. So we will be covering quite a bit of in-depth stuff also lah. Okay. So of course it is it's important and is quite necessary to look back at your trade data, look back at your previous year, how you perform, what you did wrong, what you did well, and see what you can improve lah. Okay. So it's something that I do every year. It is not just for show, it is not just to like post on public or share with public, but when I do this video, when I prepare for this webinar, I actually look at my own trade journal to see what I can do better lah, or how I can improve, or what are the mistake that I made, and then whether this mistake are something that within my control, or is it the market just being not in my favor, those kind of stuff lah. Okay. So I do hope that you guys can do something similar for yourself. Do a bit of review. Don't be like a ostrich, like dig a hole and then hide your head inside the hole. Don't want to see your trade journal because too bad already. Like too red already, cannot see. But the only way to improve is to look at your past data. Okay. So anyway, I will stop for today. Thank you guys for coming. It's been a while. I have like over 40 people. Just now I saw like a 40 plus people, but I think Friday people want to sleep already lah. Okay. So anyway, see you guys tomorrow. Same time 9:30 for Saturday webinar. Of course, Saturday webinar will be short and sweet lah. Okay. So have a good year, have a good weekend, and business as usual. We are back in full force, and we are going to ensure that our 2025 training performance we can hit 100%. That's my goal. We can hit 100% for the first time. We haven't hit 100% before, but hopefully we can do it this year lah. Okay, but of course we are not going to like die push also. If it can be achieved, then good lah. If it cannot, then we take what we have lah. Okay. After all, we are at the mercy of the market. It's not like I say 100% then can get 100%. Must see what market is willing to give us also lah. Okay, guys, have a good night. Have a good weekend and see you guys tomorrow. Bye bye.